If you're thinking about buying property or you already own one, you need to hear what I have to share today. Two major reports that just came out paint a picture of 2026 and you won't find it in the headlines or clickbait videos. And it could completely change how you invest. I'm Hitesh from Atholant Wealth, and today I'll walk you through what these reports say, what is real and what you should watch, especially if you are aiming for long-term gains with minimal risk. First, let's talk about the report from SQM Research. The 2026 Boom and Bust report forecast a 6 to 10% rise in national dwelling prices next year. They highlight that cities like Brisbane, Perth, Adelaide, and Darwin, to some extent, are likely to outperform. And majorly, the reasons are ongoing demand, tight supply, and strong migration. Then there's the forecast from Domain. Their 2026 outlook expects median house prices across all major capitals to reach record highs by the year end. Domain believes demand will be fueled by improved financial conditions, which we all are expecting, renewed buyer confidence, and the support measures. That would drive the value across the board. Now, together, these reports suggest that property growth in 2026 is not dead. It's changing the shape. Now, it's not going to be a straight line boom everywhere. And here's what to watch carefully. According to SQM Research, the highest potential gains are outside the usually expensive capitals. Markets such as Perth, Brisbane, Adelaide, Darwin are tipped to lead for sure. And that's because supply is constrained, population flow is positive, and housing remains more affordable. If we come to Domain's report reinforces a similar possibility. When buyers are priced out of premium markets, more will look to affordable alternatives, meaning good value suburbs, units, and regional areas start to shine. The likely outcome, the price growth becomes more selective. Not every suburb, but smart pockets, especially those affordable, well-located, undersupplied pockets, that's something which we should focus on. A lot of people assume price rises depend solely on the rate cuts or the market hype. But both reports, the SQM Research and the Domain report which we highlighted, they say that the current economic data shows something more fundamental. The rising household incomes plus stable demand plus limited supply are the real base of this growth. If we talk about SQM's outlook, it is built on assumptions like moderate population growth, decent labor market, and steady economic conditions, not aggressive rate cuts. Domain expects support from affordability measures and strong buyer demand, which is not just about low rates, it's also about improving the financial capacity, that too in many households. Now, what that means? Even if rates don't fall sharply, a well-timed purchase in the right area can still deliver growth and stability for you. Here's the thing most people are not factoring in. Markets are fragmenting. Not all cities, suburbs, or property types behave the same way. Where some areas stagnate or drop, affordable suburbs and units may boom. That divergence is real and likely to widen. Also, many investors wait for a perfect time. They wait for rate cuts, they wait for clarity, they wait for a crash. But from what we see in these reports and the data, that perfect moment may never come. Now, by waiting, your risk is you're missing the real opportunity. If you're priced out of premium markets or you have been stuck watching from them from the sidelines, now may be one of the most strategic windows you have got. So if you're serious about building property wealth in 2026, the worst thing you can do is make decisions based on noise or fear. The people who win are not reacting to headlines. They are preparing ahead of them. They are choosing the right locations. They are building sustainably. They are making decisions with clarity, not guesswork. At Atholant Wealth, our role is not to chase trends. It is to help people build strategies that still work when the market changes. If today's video helped you see the market differently, I am sure you're already ahead of most of the investors. I am Hitesh, and I'll see you next time.